Panda Anthem.
Ian, what's up?
Red Panda Anthem.
Red Panda, what's good?
Red Panda Anthem.
It's your boy.
Peloton, what are 5 mistakes that Peloton made, and what can we learn from this Peloton fiasco?
Yeah, number one, selection of the wrong business. They are a hardware business that got into tech, not a tech business that also serves software. Fitness is probably, outside of Platinum Fitness, is probably one of the worst businesses to be in. Write this down. Any business that you are dependent on humans to consistently take action, you're going to lose in. Fitness is a horrible business. Number two, they didn't raise capital at the right time. So when they were at that peak, and last year when they were like at 170 or 140, they should have began raising capital and not been delusional and drunk the Kool-Aid of the cult thinking that they didn't need more money. Because now they're in a position they can't even service anything new to the audience because I think they may only have 5 or 6 months of reserves in the company. That sucks. So when your capital outlays are that heavy and the subscriptions are not doing well, you're going to run into a danger zone. Number three, they misled the investors of the company about how much capital was needed before they gave out that $1 billion in equity. So anytime you have leadership that lies to the investor base, that's never a good thing. I get it. A ton of stocks went up in 2020. Zoom got caught up in it as well. Teladoc as well. But when you begin to lie to cover up the mistakes of the business, that's never a good sign. Number four, constant change in the price strategy. There's 2 models you can chase. You can be premium, which I prefer to do, or be low end. You can't play both sides, right? And then you have to understand, even when you have a subscription-based business, the best case scenario, you're going to lose 5% every month, no matter what. Worst case, you can lose 20 to 25%. So in 4 to 5 months, you can lose a majority of your base if they don't love you at a product. And then one of the biggest ones, lifestyle creep. They bought a 300,000 square foot office space in New York at the peak of the market. And then the CEO, and that's why I tell you guys about lifestyle creep, got a $55 million vacation home nearby. So as soon as things got popping, I'm not mad at it. Everyone wants, to the 80s babies, Gordon Gekko, now the Axelrod lifestyle, but that lifestyle creep into the business. As you grow, you have to keep those expenses low, just in case things turn bad, right? So that's a big mistake. Whenever I see a lot of splurging in the business, and that's why I always go to, if we look at the crop of Indian CEOs, because of their humble beginnings and conditions, they come here, they rise, but they live a relatively low lifestyle. That's one of the things I love about Microsoft CEO. That culture has been embedded from his experience into the company. And as you've seen the turn in Microsoft. Number 6, just not knowing there wasn't enough demand for what they were offering and buying into the hype. And I think that the final mistake that they made was not pitching to sell to Apple, Google, or Disney last year. Because if you look in that space, stock was at 171. You're arguing at that point that they're more valuable than Square. Impossible. I feel bad for this company. I know they're going to try and take the company over from the CEO. I feel bad for him. But it's at 29.71. I'm telling you, do not touch Peloton unless they get a new CEO and new leadership under their possession. It is dead.
This that Red Panda Anthem.
Ian, what's up?
Red Panda Anthem.
Red Panda, what's good?
Red Panda Anthem.
It's your
Whole
boy.
foot going up. I know they can't stand it.